Hello and good morning, ladies and gentlemen. Welcome back to another session of Almus Market Mornings, your daily dose of update of financial markets around the world. This is your host Shikhar Garg, and with me today I have our COO, our expert, Mr. Jayaram Krishnamurthy, to give you the commentary today. Now, JK, we do understand geopolitics is at the fore, and it isn't subsiding as against the expectations of the many. But we also know that there's FOMC coming up. So, what do you expect from the FOMC meeting, and what was there anything for us in store when the testimony of Powell happened? It seems as if few sections of the market loved what is going on, while the equity indexes saw some green. Even the benchmark yields rallied. So, what exactly happened with the testimony, and what are we expecting out of FOMC? Can you please tell us?
Certainly, Shikhar. Lots happening on the economic side. Of course, nowadays nothing seems more important ahead of war news. And as things stand, no one can say with certainty that it will not turn uglier. Russia continues to siege more areas of Ukraine, but their foreign minister says they are ready to discuss Ukraine president's desire to receive security guarantees and calls it a positive step. He also says Moscow's aim is demilitarization of Ukraine and that Ukrainians must decide their own leaders. But none of these change Western approach of piling more pressure economically on Russia. In fact, Biden has said that nothing was off the table when asked about banning Russian oil and gas, and that is very shocking. While Russian economy is bound to be crippled due to various sanctions, Western countries are not immune to the big hits to their own investments. Thus, markets are not going to settle for quite some time. Of course, yesterday we did see a short covering rally in stocks after Powell's somewhat soothing statement that US economy could achieve a soft landing and almost ruled out a 0.5% hike in March. Further, Fed would remain nimble on its approach to monetary policy in view of the new situation. Along with stocks, yields also recovered, helped by Powell's soothing statements. Dollar went down marginally and gold corrected down as well. But it's a different story as far as oil is concerned. OPEC countries decided to stick with their current output increasing plan, and no upward revision was announced, while some expected it in view of the disruption in supplies after Russia's attack of Ukraine. This is likely to keep oil prices elevated. Already, adding to supply constraints, some oil buyers in recent days have shunned Russian crude, fearing that if sanctions were applied to Russian oil or gas, their purchase of oil could be rendered unusable. Both WTI and Brent crude trade at new highs last seen in 2011. Adding to the inflationary impact of higher oil prices, benchmark thermal coal in Asia, the largest market for the fuel, soared 46% to a record as concerns about disruption to supplies from Russia turbocharged concerns over tight energy markets. Wheat prices have soared to a decade high with concerns about supplies being affected. The grain traded limit up during the day yesterday. Meanwhile, US data has been mixed. Trade deficit came at a record 107 billion for January, leading analysts to revise down GDP forecasts. However, ADP private jobs report showed a hefty 4,75,000 new jobs added by private employers versus 3,75,000 expected, and last month's numbers had a big upward revision too. This supports Powell's statement that US economy is in a position to absorb higher rates. Powell backing 25 basis rate hike in March, as against 0.5 believed by some till recently, moved Treasury yield curve much north. 2-year, 10-year, and 30-year yields are dealing at 1.47, 1.86, and 2.24 respectively. Traders have reduced probability of 50 basis point hike to as low as 5%. In fact, German yields have just managed to come into the positive territory in the last session. Indian 10-year GSEC yield closed at 6.815%, tracking crude oil prices, and likely to face resistance around 6.87%. In other economic development, Bank of Canada raised policy rate by 0.25% to 0.5% as expected, and market expects a series of rate hikes in the coming months. Eurozone inflation came again much higher than expected, putting ECB in a much bigger fix. While inflation is soaring, they cannot ignore the negative impact on growth due to ongoing Ukraine war. On balance, we expect them to remain dovish for now, notwithstanding domestic political pressure to rein in inflation. In India, preliminary data shows merchandise deficit rose to 21.19 billion in February, with bigger surge in imports of oil as well as non-oil products. Average monthly deficit is now around 20 billion for the last 5 months, which is far higher than the 14-15 billion seen pre-pandemic. As global crude prices keep soaring, the number will increase further and push up current account deficit beyond 2% of GDP, and that will keep the rupee under pressure. FII outflow for the financial has been in excess of 10 billion, and that trend might not change soon as global financial conditions tighten. For the rupee, central bank's vigil has been keeping it steady despite mounting negative macros, and this situation can continue for some more time. Expect 76 to offer good resistance and 75.30 to be a good support for the near term. Thank you. Have a nice day.
All right, JK, that was quite good. Now we do know that there's a lot of inflation-related questions on the performance of economy going on, and it's everywhere. If we have to see Eurozone, India, America, everywhere we are seeing some bit of inflation rearing its head here and there. So, and quite possibly why should not be there some sort of inflation, because the oil, energy and commodities, all the prices are still going high, logistics and everything is getting expensive. So we do see inflation keeping there, but hopefully we see some sort of changes in situation when it comes to geopolitics soon. And as there continues to be a lot of negative updates on the geopolitical front, there is still some sort of positive banter going on by Elon Musk when it comes to Twitter at his actions. Recently, one of the chiefs of Russian higher power authorities mentioned that they will take down ISS, which is the International Space Station, and asked who will save them from falling in Europe and everywhere. And to that once single threatening question, Elon Musk came to answer with the image of SpaceX. Now, I don't know what he's doing. It's wise, courageous, or what it is, but he still is enjoying what it is. So that's it for today, guys. We'll see you again tomorrow with our technical updates on the market front. Till then, we bid adieu. That's it. Thank you.